This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, August 21st, 2017. Last week, many commodity prices rose and economic reports were mixed. U.S. steel production rose slightly to close to a 2.5-year high despite strong steel imports, which are hurting U.S. steel producers. Oil fell slightly to about $49 a barrel, near break-even for many U.S. drillers and below the about $60 a barrel that OPEC would like. The oil rig count fell 5 to 768 as prices remain well off their highs of a few years ago. Iron ore jumped $8 a metric ton, closing at $75.50, about a 4-month high on solid global demand, putting upward pressure on steel prices. Scrap ferrous prices continued up. With September approaching, we are hearing there could be more upward pressure. Nucor's DRI plant, their scrap metal substitute operation, remains offline, adding to the upward pressure. Hot-dip galvanized steel was unchanged at $9.40 a ton on continued good demand. There were numerous announcements last week of rebar and sheet up about $30 a ton. Stainless 304 scrap price remained steady at 29.5 cents per pound. With ferrous prices on the rise, stainless is seeing upward pressure. Copper rose to a new multi-year high, ending at $2.94 for the week on solid global demand. Copper's up about 4 cents this morning to $2.98. The 5-year chart shows copper at about the 3-year high as scrap spreads continue to increase due to large amounts of material coming to market. Copper inventories fell slightly but remain at much higher levels than 12 months ago, which is actually tempering the price increase. Aluminum hit a new multi-year high, ending at 93.9 cents on continued good global demand. The 5-year chart shows prices are near a 4-year high as the global economy continues to improve. These increases, though, are causing manufacturers to relook at higher strength steel and composites. Aluminum inventories fell yet again to a new about 10-year low on good global demand, which continues to put upward pressure on the prices. U.S. housing starts, a key economic indicator, fell 4.8% to a seasonally adjusted 1.55 million. On the positive side, this is more than double the low of 478,000 in 2009. But the average over the past 57 years has been about 1.44. Frankly, this slowing could indicate a problem in the economy. Retail sales, a major economic driver, were up a strong 0.6% in July, the sharpest increase since December, driven by purchases in retail stores and vehicle sales. August Consumer Sentiment Index rose to 97.6%, the strongest reading since January, as people felt better about their personal financial prospects, helped by the 8-year run-up in job creation and stock market increases. U.S. industrial production rose a strong 2.2% versus last year, the highest annual gain since January 2015, with manufacturing rising 1.2% and strong 10.2% rise in mining, putting upward pressure on commodity prices. Initial unemployment claims fell to 232,000, the lowest since February's 227, which was the best reading since March 1973, 44 years ago. Claims have been below the key 300,000 level for 128 weeks. That's 2.5 years, making this the longest stretch since 1970, 47 years ago. Wall Street ended down at 21,675 as many are nervous about the U.S. economy. The expected tax cuts, which were to boost the economy, have been delayed, but the global economy is doing better than expected. Many are unhappy with the 2% U.S. growth, but many companies in the U.S. continue to have record profits, keeping upward pressure on commodity prices. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.